Great. So first of all, if anyone is entering into different share transactions or future option derivative or maybe mutual fund. So everyone knows that most of the share transactions or FM mutual fund transactions are offered as a capital gain. There is no much debate is there. Still, if one is entering into a lots of share transaction wanted to offer as a business income, that's a debatable issue. We'll take later on a slight part of that. But let's come to the main topic where topic of the session is that is how we can report the transactions from future and options or derivative transactions. So let me start from the scratch first of all. Why and where to report this transaction first of all, or under which head we should report it. So future and options transaction or derivative transaction, whether we can offer it as a business income or the capital gain. So for that, most of the people are offering as a business income because for entering into future and options, no investment is there because in future and options, we are not taking a delivery of the any particular shares or the that particular options or the underlying assets for which we have entered into future or options. So most of the people are entering into business. Now, if we are showing the same as a business income, so how we can calculate the turnover? Because main question comes out whether if you are having the future and options transaction or derivative transaction, we are offering it as a business income, then whether we need to get our accounts audited or not. And for that, we need to calculate the turnover. That's the first critical aspect. So we are checking that aspect. As far as the word turnover is concerned, so for 44AB, not only turnover, it is the sales, gross receipts or the turnover. If exceeds then 1 crore or 10 crore, then tax audit will be applicable. So first question, whether that term sales, gross receipts or turnover is defined in the Income Tax Act. So answer is no, it is not defined anywhere in the income tax law. Though for some of the section, word turnover is used. For some of the specific sections, export turnover is defined, but turnover or sales receipts or gross receipts are not defined. So now, how, in case of a derivative and the future and option, how to calculate the turnover? Now, before I start it, let me take a simple example. In a future and options, I have a purchaser, for example, option. For that, I have paid a premium. Just a minute. I think someone is unmute. Udang bhai, તમે જરાક unmute કરી દેશો? Thank you. Okay, done. So, for the matter of the turnover, how to calculate the turnover? So for that, I'm taking a simple example. I have purchased option for which I paid a premium of rupees 1. Against that, I got an option to purchase particular share at a particular price after 3 months. In that transaction, after 3 months, I have a gain, for example, of rupees 10. And for another transactions wherein I paid a premium of rupees 2, there is a loss of rupees 20. So in that case, these are the two transactions are there. For again, first transaction premium paid 1 rupees, wherein I have a gain of rupees 10 at the after 3 months when I exercise my option. In second case, I paid a premium of rupees 2, but I have a loss of rupees 20. So again, now in this scenario, how to calculate the turnover? So most of the people are aware that in this case, whatever turnover is there, that will be 10 plus 20. So whatever profit or loss is there, remove the minus sign or negative figure and only simply add the figures. So over here, my turnover will be rupees 30. That's how I'm supposed to calculate the turnover. Now, what is the basis of calculation of this? So that is the guidance note issued by the ICI. Because income tax is completely silent, then how to calculate the turnover in this kind of transactions? So that's why we are relying on the guidance note. Whether we can rely on the guidance note, that is a perfect. But whether assessing officer is bound to accept this kind of treatment. So for that, I have mentioned this Supreme Court judgment, wherein issue was in context to some different section. Section for 10B or 10BB, wherein export turnover is required to be defined, and for that, turnover need to be identified. So now in that this case, whether scrap will be part of a turnover or not, that was the issue. But in that case, Supreme Court has observed this. If a definition of a turnover is not available, then the apex body for the accountants, that is our Institute of Chartered Accountants of India's guidance note should be relied upon. That's what they have mentioned over here. So by relying on this judgment, our calculation will be based on the guidance note. And that's how a guidance note says you need to ignore the sign of the or profit or loss sign of the each profit or loss of each transaction, and we need to add up that. So in our example, the total turnover will be rupees 30. For example, in this case, if we have sold the option and if we have received the premium of rupees 2, then if we have received something, then that also will be part of our turnover. That's how we need to calculate the turnover. Now, if this way, if we are calculating turnover, then after we need to calculate the tax audit. But how to have the this accounting entry? So that question I have has been raised many times. So in this kind of scenario, for example, in first transaction rupees 10 is my profit, that will be on credit side. But minus 20 is my loss. So that will be visible on the debit side of my trading account. So now, because my turnover is 30, I'm getting my accounts audited. That figure will not match with the actual financial statement sales side or credit side. So that problem will be there. So because of that, I don't think that much issue will be there. Some of the people say is that, yeah, sir, in this case, for example, my sales or credit side is only, for example, 5 crore. But because of this calculation, my turnover is, for example, 12 crore. So there are chances that department may raise a query that you are not applicable, you are not eligible for an audit, and still you are getting audited because to extend the time limit. So this kind of problem could be there. Why? Because CPC Bangalore is processing the return, and every year they are updating their software that how to find the mistakes. So if this kind of mistake you would like to avoid, better to file this kind of return before the 31st of July, or in the non-audit case. As of now, the time limit is extended to 15th of September. So that you can do. But in most of the years, we are not facing much issue. So that's the first part. Turnover is there. Now I'm coming to this judgment is there. Just a bit. Now, whether the calculation what we have discussed, that how to calculate the turnover in case of derivative transaction feature an option, whether in judgments are available which supported our contentions, answer is yes. The first judgment is of 2014 of Mumbai Tribunal in case of Anhita Nalin Shah, wherein the Honorable Tribunal has held that in case of speculative business, when delivery is not taken, then if total of profit or loss of each speculative transaction is more than rupees 40 lakh. So again, speculative transaction means wherein we purchase the shares but didn't take the delivery. Rather, we simply sell the same. So I purchased the shares of Reliance for 500, sold the same share for 510. So I have profit of rupees 10. So in this case, my turnover will not be 510 rupees, it will be 10 rupees only because I have not taken delivery. So we can take the base of this judgment. Second judgment is the same Mumbai Tribunal has held. The transfer of immobile or movable property by way of investment is not included by provision of section 44AB of the Act. That is in different context. And in a case of MCX also, the judgment of Home Stock and Commodity Private Limited is available. We say value of sale transaction commodity through MCX without delivery cannot be considered as a turnover for the purpose of section 44AB. So they have not taken a delivery. In our example, we have not taken delivery of Reliance shares, which we sold for 510. So that cannot be part of our turnover. So this judgment can also be useful. Then, any query for this part, let me know in the chat box. Uh, can I take the queries in the middle of the session? Is that fine? Because that will be more relevant because I'm changing the topic.
Okay, fine.
Then, okay. Before may I take up this query, let me move to one more slide. Now, what ICDS says, if you refer the ICDS, the revenue is defined over there. That is income computation and disclosure standard. Over there also definition is quite wide and nowhere they are answering that how to calculate the turnover in context to 44AB when transactions are in relation to derivative or future in options. So I'm referring just the definition. Revenue is the gross inflow of cash, receivable or other consideration arising in the course of the ordinary activities of a person, from the sale of the goods, from the rendering of service, or from the use by others of the person's resource yielding interest, royalty, dividend. In an agency relationship, the revenue is the amount of commission and not the gross inflow of cash, receivable, or other consideration. So over here also, how to calculate the turnover in case of derivative in F&O is not defined. So again, same conclusion. Now, another aspect, again I'm repeating, if you had any query about this topic, please post the same query in the chat box. If it is from YouTube, it will be taken later on with the help of the coordinator. Now, whether derivative and future option transactions will be a speculative transaction, because speculative transaction means we are not taking a delivery. So I'm purchasing the shares of 500 of Reliance for 500 rupees, for example, and selling the same share for 510 without taking delivery. This transaction will be speculative. What will be difference between speculative and non-speculative? For speculative losses, the same can be carried forward for only 4 years. But for non-speculative, it can be carried forward for 8 years. So that's the main difference, and set of difference will be there. Otherwise, taxation angles, will be the same. Tax is same for the speculative as well as for the non-speculative for business income. So this is a definition. Over here, section 43, subsection 5, which says speculative transaction means a transaction in which a contract for the purchase or sale of any commodity, including stock and shares, is periodically or ultimately settled otherwise than by actual delivery or transfer of the commodity or scripts. So if you are not taking delivery of a shares, it will be speculative. But how to calculate the turnover? Same logic. But proviso is given in section 43.5. Provided that for the purpose of this clause, I'm moving to clause number D. An eligible transaction in respect of trading in derivative referred in clause so and so carried out in a recognized stock exchange. So if you are entering into derivative transaction for shares or for a commodity, clause number D and E of proviso, then it will not be a speculative transaction. So if you are entering into future option derivative transaction, it will not be speculative. Now, my another last question, whether future and options or derivative will always be business income. So answer to this will be, first of all, under income tax law, nowhere it is a clarified then when anything will be counted as a business income or a capital gain. So there is no clarity is available. As far as this section 43 subsection 5 is concerned, it is actually covered in the business and profession. From section 28 to the section will be 45 or something like that. So this section only talks about that when any transaction will be speculative and when it will not be. It nowhere mentioned that derivative transaction will be treated as a business income or as a capital gain. So again, from future and options or derivative, whether it can be offered as a business income or a capital gain. So for that, lots of dispute has arisen in past. In which context? Let me give an example. I'm entering into share transaction. My share transactions are extremely high. So earlier, long-term capital gain was exempt and short-term capital gain was taxed at a 15%. But my transactions are very frequent and quite in big volume, in a large volume. So I offer it as a capital gain because that is more beneficial to me. And department always take a stand that so many transactions are there. It cannot be a investment. It is obviously business. You are trading in the shares. So they take a stand that it should be taxable as a business income. So because of this kind of dispute arise in many cases. Sometimes assessee take a shelter that I wanted to offer as a business income. Why? Because he can take a claim of a different deduction, and that's how he can tax plan. He can plan his tax in a more efficient way. But department will say reverse, that it should be capital gain. So that dispute arises. From that dispute, some parameters are defined that if particular person is having a business income, obviously he will do it normally for a full-time basis. Normally it will be in higher in volume. So there are some parameters what a high court or some courts consider for considering it as a business or the investment. For example, I am already employed, full-time employed somewhere, then I cannot spend my time in doing this activity. So obviously, whatever activities are there, it will be treated as a my investment activity and it will be taxed as a capital gain. That's what the conclusions are. So in case of F&O or derivative, can we say that it is my investment activity? Answer is slightly difficult because F&O basically cannot be termed as investment. This is basically you are entering into transaction just to take the fluctuation of the sum of the shares or the commodity. That's how future and options works. So we should not offer as a capital gain, but again, there's no clarity in the law. If we are going for litigation, it will not be a good uh, stand to offer the F&O income as a capital gain. Then now taking a queries. Oh, no. Many queries are there. In one of the queries from the P. Balaji, in case of full-time traders, how to calculate the turnover in case of intraday, delivery of equity transactions, and commodity, currency, future and option transaction, and how to prepare financial statement. Uh, to P. Balaji, first of all, in case of intraday, whether in intraday are you taking a delivery? Answer would be no, obviously. I'm not expert, but you are not taking delivery. So in that case, you need to take the difference. So again, same example, I have not taken a delivery. So difference from that transaction, for example, by purchasing purchase share for 500, sold the same for 510. So 10 rupees will be my turnover from that transaction. So that how you need to calculate turnover for each and every transaction. In case of intraday done, delivery of equity transaction, if you're taking a delivery of equity transactions, so in that cases, whatever sales price of the equity shares are there, that will be turnover. And this is also confirmed by our guidance note issued by the ICI. So if you're taking a delivery, my sales price should be taken as a part of my turnover. Same way in commodity. If you're taking delivery, the whatever sales price is that, that will be your turnover. For F&O transaction, already explained. How to prepare financial statement. So in that case, whatever loss is there, that will be shown as a purchase side or debit side of trading account, and profit will be shown as a credit side of trading account. That's how you need to prepare a financial statement. But for calculating turnover limit, you need to calculate differently. That will be your purchase and sales total. That's how indirectly it will be. I think I answered the query. Prakash bhai, for intraday, same concept will be applicable. Yes, you need to take the difference. Okay, one query is from Sankey. Whether future and option, can we show it as a 44 AD or not? So let me take a simple example for everyone. For future and option, I had a, for example, profit. Net profit is a 10 lakh. That's very rare to get the profit from future and option, but still I'm taking some example which are not real. So 10 lakh is my profit from future and option. If I calculated my turnover, let me say my turnover as per this calculation is, for example, 30 lakh. So someone is saying that can I declare 30 lakh as my turnover and 8% is my 4480 profit? So for that, my answer is if you read section 4480, it as of now says that of your turnover, the actual profit, if you're claiming to earn that income or 8% or 6% of the turnover that you need to offer. Nowhere in that section it is saying that whichever is higher or whichever is lower. So if you offer the 8%, so assessing officer can always take a claim that you need to offer the actual profit. Why actual profit? Because from the report available from the broker, it is extremely easy to identify the actual profit. And in that case, expenses will be visible. Unless you are incurring some interest expenditure by taking a loan, that's a separate discussion. So I would suggest to avoid the litigation, offer it the actual profit and don't go for 4480. Still, there is no clarity, agree. If you one wanted to offer 8% of turnover, whether there is one of the possible option, yes, but a quite risky option because I don't think that that will be agreed by AO or any appellate channel. So ignore it. I'm moving to next question of Mitesh. Just a minute. Let's keep it. I think I missed it. How to prepare financial statement for this transactions? Already mentioned it. If you have a specific query, let me know, Mitesh. To Shreya. Okay, how to show future and option profit in ITR if turnover is 30,000. So in this case, you need to file the ITR very in a simple way. For example, again, my 10 rupees is my loss. Sorry, 10 rupees is my profit. So it will be shown as a credit side. 20 is my loss. So it will be visible on the debit side. And so in this case, my loss will be minus 10. I'm assuming no other expenditures are there. So in this case, you need to show the loss of rupees 10. And on the credit side will be 10 and debit side will be 20. So never expect that your calculation of turnover will match with the financial statement. That will never match. And nowhere in the ITR, your calculation of turnover will be visible. Clear, Shreya? Hope that you get the answer. Moving to next. Pallavi, if short position of options are open as on 31st of March 2025, then what will be accounting treatment? Great question. This question is also answered in the guidance note issued by the ICI. They say that your position is open as on 31st of March 2025, so it is not a squared off. So of that transaction, nothing will be taken, nothing will be counted for turnover. So it will be open. No entry will be there in your books of account. As I understand, if you have paid some premium for that, that will be shown as expenditure. But otherwise, no entry will be there in the books of account, and nothing will be offered into financial year or previous year 24-25. And if one wanted to refer the guidance note, the relevant para is the 5.11 of the guidance note. New guidance note issued just before few days back. That is a revised 2025. That para I'm referring. Okay, lots of questions are there. If a one-off transactions of speculation, then is it a business income or can be treated as other income? Okay, only one transaction is there of speculation, then don't go for other income. Offer it as a capital gain. Because if you have taken a speculative transaction, only one, that is a one transaction, then offer it as a capital gain. You cannot offer it as a other sources because that will is a capital asset. And transfer from the capital asset is taxable as a capital gain. So yes, you can take it. And one more thing, just one more point. If anyone had a query that when I can offer share transaction as a business income or capital gain. So already I answered it in the income tax law. There is no clarity, but department has issued a circular wherein in somewhere in 2016 it is actually an overriding effect to the this old circular that they are mentioning that if a holding period of a particular shares is more than 1 year, you can offer it as a capital gain. We will not dispute that, but it is a holding period is below the 1 year, then option, then there is no clarity. So for that part, I think you can take a leverage or you can have a tax planning. If readily available, I'll also share on the screen at the last circular number. Uh, s- I think Senki is available. Senki, can you share the copy of the circular in the group? It will be great help for me. Moving to next. Shreya's question, if a shown as a business profit tax, if a shown as a business profit tax audit required, balance sheet period required. If you're offering this transaction as a business income, calculate the turnover. And by calculating turnover, whether you are falling in the limit of 44 AB, then yes, audit will be required. Hope that your question is answered, Shreya. Then after cable, same goes with intraday. Yes, business profession or capital gain. Your query is not much clear, but I think all the questions are answered. If still any specific question, please post the same in the chat box. Moving to next, for taking a GST registration, turnover limit includes future and option and derivative. So first of all, this guidance note issued by ICI is not applicable for GST. Under GST, we need to refer the definition, whether any clarity is available or not. So that we need to check first of all. So that is in context of GST basically. So that's not my domain. But this calculations, this ICI guidance note only talks about the calculation of turnover in context to 44 AB. So you need to refer the definition of a turnover under GST law. If there is no clarity, it is we need to do some more research. Moving to next. In case of employees, where as per terms, they are not allowed to do business. Now employees doing a heavy share trading, including intraday, sell purchase shares almost on daily basis. Can department object if employee showing it as a capital gain? Yes, department can take the objection, but you have a very good stand by saying, you see, in this kind of scenario, there would be litigation if a matter is selected for scrutiny. And department will always take that stand wherein they will fetch more income tax from the assessee. And assessee will always take that state which is beneficial to him. See, yes, dispute could be there. So first of all, let your client know that it is a debatable issue. Litigation could be there, but in litigation you may win if you are offering it as a capital gain. Why? Because your employee is fully occupied somewhere on a full-time basis, so he cannot do the business. Even counter arguments could be there. Therefore, doing a business, there is no requirement of attending business by myself. Other person can also handle my business. There could be counter arguments, but it is continuous process. Moving to next. Chirag Jain, 10 crore is turnover limit for audit. Answer is not so much simple. 10 crore is limit, yes, if your cash transaction is within 5%. Otherwise, it is a 1 crore and 2 crore and 3 crore and lots of things. Done. Same goes with the intraday. Can we show it as a PGBP or capital gain? Intraday, yes, it will go same. If it intraday, you can offer as a capital gain, you should not because that's quite risky. Department may not accept that stand. Moving to next, lots of queries are there. 21 queries are there. Oh, I'm trying to take it fast. Huh? Please, my humble request, listen to my answers. There are chances that your queries is answered in one of the other person's query. Deepal Kumar, if loss is there in F&O and then instead of getting audit to carry forward, if we declare profit 6% of turnover, will this work? In this kind of scenario, you are declaring more income. So department will not have an issue. So yes, you can do this. There won't be an issue. Because department, you are declaring more income and department is not going to say that I will charge more. You are already offering more. But I understand you are doing this to just to avoid the audit. And otherwise, also my humble request, if you are doing a future and option, never go for 4480. Because in this future and options, as per data available, 92% people are losing their money. That's I think, notified by the SEBI or some authority. So never go for 4480, and otherwise also 4480 is risky. If you have earned more, offer the actual amount. Next question from Gosia Sayed. It mandatory show turnover of a future and option in ITR? No. Nowhere you need to mention turnover. You need to show the financial statement wherein a credit and debit will be there. Where credit will be your sales or receipts, something like that. And or we can show only loss and expense and carry forward our loss. Yes. I would suggest for each transactions, if you are getting a profit or loss. In our example, one entry is a 10 rupees positive, 10, 20 is a loss. So enter both the transaction in the trading account. That is a better treatment. And you will be able to reconcile the turnover very easily. Moving to Shrikant, if a profit from future and option is less than 6% of turnover, what to show? Show the actual figure. And if required, get the accounts audited. That will be applicable. You need to get your accounts audited only when earlier you have gone for 44 AD and now you're coming out. That's first scenario. Or your turnover is more than 10 crore. Because otherwise, if you are not getting your accounts audited, that will be fine. Okay, Nikhil Jain, how to maintain accounts if number of transaction 1000 because everyone take a 50, 100 order in day. That I think charge more if he's not giving a, so ask your assessee to get the accounting entry done from some other person if he's not ready to pay the amount. In that case, I don't have much option. No? You have to record it. Thank you, Shreya, for answering. Okay, circular number, I cannot recall it. Oh. Is of 2016. Recently, due to tax rebate up to 12 lakh. A query from Pavan. I don't think that I can be able to conclude the query. Lots of queries are there. Shall I go with this? This
we
query, I
can
think I'm ready.
we
Huh?
can
I'm ready to answer
have
the
queries
queries.
at end.
Okay. So what should be done? Bhavin bhai or Ashutosh bhai or anything? If
स्टार्ट
we
करो
will not answer
दिव्यांग
this
भाई.
query, I think we cannot conclude this query for sure at the end.
एक्चुअल में आपने देखा नहीं, एक साइड में और भी है क्वेरीज. एक्चुअली क्वेश्चन
Okay.
एंड आंसर में वो और क्वेरीज है. वहां पे भी 13 क्वेरीज
Okay.
है. हाँ. तो मोर देन दिस वन. सो
Okay. वो
आपके
मुझे दिख नहीं
ऊपर.
रही है कैसे यहाँ पर.
यस, नहीं नहीं, एक्चुअली में ये जो है ना, आप नीचे देखेंगे ना, एक्चुअली
स्क्रीन शेयरिंग
पार्टिसिपेंट्स
के
में.
बाजू में ही है.
यस.
ओके, आई थिंक मैंने शेयर स्क्रीन शेयर किया तो आई एम नॉट एबल टू विजिट। अच्छा, मोर करके है, क्वेश्चन
हाँ।
एंड आंसर।
यस।
Yeah, Q&A.
ठीक है, डन।
जैसे
तो
वी
आई
कैन
डू
डू
वन थिंग, आई एम
लाइकवाइज,
मूविंग टू द टॉपिक।
या वी कैन डू
सॉरी।
લાઇકવાઇઝ કે અગર કોમન ક્વેરીઝ હોય ને તો એક સમરી લઈ લઈએ અને પછી એક કોમન ક્વેશ્ચનો આપણે વન પોઈન્ટમાં આન્સર આપી દઈએ બીકોઝ મલ્ટિપલ ક્વેશ્ચન્સ આઈ
true.
કેન સી દેટ દેર આર રિપીટેટિવ.
So someone can just summarize it
Bhavin,
by the time I can
Bhavin,
finish.
Bhavin will do a list. He'll go through all the queries
True.
and he'll summarize all the questions. So after a certain
Great.
point, Kato, at the end of the session, we'll take a common questions and
Done.
then we can go ahead likewise.
Done. 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 I'm
Done, sir.
moving to the another topic.
Thank you.
Yeah.
Yeah.
Thank you. Okay.
So let me stop the sharing. First of all, I'm just sharing the another slide. Now, I'm just taking another topic, that what are the changes available in the ITR as of now. Very few changes are there, and out of that, very few changes I have taken in the slides which are relevant. Earlier, while we were filing the income tax return, so we need to furnish the Aadhaar number of the assessee or the as a partner or as a trustee. In that place, we can also enter the enrollment number for the Aadhaar. That was allowed. But now some amendment is made in section 139 AA, and now only Aadhaar number need to be entered. So now enrollment ID instead of the Aadhaar number is not allowed. That's what the first change is. Second change is section 115 BAC. That is a section under which individual is allowed to opt for the old regime now, because new regime is by default. So, but earlier there was a reverse was the scenario. So now we need to select whether earlier we have opted out of the new regime. So now they're also asking a question: if you have opted out of the earlier new regime, you need to select options, and then after you need to give the acknowledgement number and so and so. Some confusion was also there, but form was not well drafted. But if you go, so what was a form? We need to select one of the option, that have you opted out of the new regime in for 24-25. So one option we have to select. One option means by filing the separate form or by the filing ITR return. Because for the assessee who does not have a business income, no separate form was required. Simplify filing a ITR. In that ITR, we need to select the appropriate column. That's it. So again, in assessment at 25-26, they are asking how you have opted out in the 24-25. The one of the options you have to select. So meaning thereby we have opted out indirectly. That's what they are compelling us apparently. But if you refer the next points, they are asking not applicable option is also available. So that is a resolution. Moving to next. Okay, reporting of income declared under presumptive tax scheme of section 44 BBC. So this is the new presumptive taxation is available uh, for the cruise tourism, for the resident people as well. For that, new section is introduced. So for that, different columns are introduced. Skipping that now. Okay, capital gain. So now, because of Finance Act number 2, 2024, if a asset is transferred after 23rd of July 2024, then earlier long-term capital gain was taxed at a 10%, but now it will be taxed at a 12.5% if covered by 112A. If it is short-term capital gain covered by 111A, earlier tax rate was 15%, but now it will be 20%. So in the return, we need to mention the date of transfer. So it is a transfer before 23rd July or after 23rd July. That segregation is given in the ITR form. So that is another change we need to take care while filing the income tax return. That slab is given. Moving to next, reporting of buyback proceeds as deemed dividend. This is slight complex. Would like to throw some light. Earlier, if a buyback of the shares were there, there was a deemed dividend. In that deemed dividend, dividend distribution tax was supposed to be paid by the company itself. Then after, there is another amendment that dividend will be taxed in the hands of the assessee. So now they have brought another amendment wherein they are saying that if a company is a buy back the shares, so in that case, let me take a scenario, rupees 100. I'll take the example later on, but in short, buyback options in that case, whatever amount you receive from the company, that will be treated as a dividend. that you need to offer as a dividend. And if you have purchased the shares, which is bought back by the company, the cost is rupees 100. That will be available as a to carry forward the loss as a short term or long term, depending on the time period for which you hold the assets. So that is the logic. I don't agree. This amendment is like not valid as per the constitution, but we'll discuss later on. Moving to next. In the income tax return, if my total income is more than 50 lakh, then in the return I need to show my assets and as well as some liabilities. But now by ITR form, that information is required to be given only if your total income is more than 1 crore. So if your income is less than 1 crore or equal to 1 crore, you need not to fill up that schedule wherein details of the assets and liabilities are asked upon. Moving to next. Schedule TDS requires disclosure of the TDS section. So now, earlier we were claiming a TDS credit by software itself, but now in TDS schedule we also need to show the under which section TDS is deducted. Earlier that column was not there, but still it will not make any much difference because we are importing the TDS from the software itself. That are the only amendment. Moving to next. I'm also going to take some relevant amendment of Finance Bill 2024 because of that amendment. Those amendments now will be applicable in 2025-26 assessment year. So what I'm sharing with you is a simply memorandum of the Finance Bill of 2024 and referring very few parts of it. This is memorandum. I'm just skipping most of the parts. I'm skipping most of the parts of this memorandum, only concentrating on the relevant part. Is that visible properly? This is something important. Section 56, subsection 2, clause number 7b. This section says, that is written on, to provide that where a company, not being a company in which the public are sufficiently interested, receive in any previous year from any person being a resident any consideration for issue of shares. If the consideration received for issue of shares exceeds the face value of such shares, the aggregate consideration received for such shares exceeding such fair market value shall be chargeable to income tax under the head income from other source. So my company is there which issues the shares, face value is 10 rupees, fair market value is also 10 rupees. I issued the share for 100. So 90 will be taxed in the hands of the company because they are receiving the dividend. Right? Now, this subsection is now removed. It doesn't mean that now this transaction is not taxable. But this transaction is by default taxable under section 56 to 10. That is gift. If I receive the gift in a terms of money, in terms of mobile property, in terms of immovable property. So in terms of mobile property, shares are covered. And in that 56 to 10, each and every kind of assets are now covered. So when companies are covered by 56 to 10. So having this section was not serving any purpose because similar provisions was there. That's why removed. Moving to next. Promotion of a domestic cruise ships operation by non-resident. So if a non-resident is operating domestic cruise, some presumed taxation is available. That section is given 44 BBC. Just a minute. Moving to next. Search. I'm not taking it as of now because not relevant for filing return. But otherwise, search cases were covered under section 148 itself. But now old provisions are brought into picture because that was more comfortable for the department. Rationalization for the imposing the rationalization of the provision relating to period of limitation for imposing penalties. So in this case, earlier penalty order was required to be passed within a 6 months from the end of the month in which assessment order is passed, wherein addition is made. But now they have said penalty will be levied within a 3 months from the end of the quarter. That is amendment. This is the part. Moving to next. Yes, appeal to tribunal. Earlier, in the income tax appellate tribunal, if you are filing the appeal, that need to be filed within a 60 days from the end of the from the 60 days from the receipt of the CIT appeal order. So now they were facing issue because how to calculate the time limit for the department, because in ITT even department file the appeal. So for month wise, they can collect all the appeals simultaneously for finding the limitation period. So they are saying that in the ITT you can file the appeal within a 2 months from the end of the month in which order is received. So there's a small changes there. Now just one more thing. If in the for trust, if there is a delay in filing a registration application, then condonation application can be made to the same authority, that is principal commissioner or commissioner. That power is given to them by the section itself. So that you can consider. Capital gain rationalization, earlier different limits were there. So but now different limits for holding period were there, but now only two limits will be there, 12 months and 24 months. So about 12 or 24 months long term, above below this, it will be short term capital asset. TDS rate are reduced quite in a very substantial way. These are the charts. So payment of insurance commission 5% was there. Now it is a 2% from 1st April. Payment in respect of life insurance 5 to 2. So different charts are given. Can we go through from this? Moving to next. These are the same. Explain detail. This is the ease in claiming a credit for TCS collected, TCS deducted by salaried employee. So if we refer the TDS provision for employees, section 192, over there, if any TDS is deducted by other person, that was considered by the employer. But TCS can be considered by your employer. So for example, I'm traveling outside India and TCS is collected. Whether that TCS can be considered by my employer for deciding that how much TDS he need to made. So earlier there was no provision, but now they have enacted the provision. So that you can consider. Now, increase in limit of remuneration to working partner of a firm. So earlier, so earlier, the limit for giving this remuneration to the working partner was this: up to 3 lakh of the book profit or loss, it is a 1.5 lakh or 90% of the book profit, whichever is more. And for the balance book profit, 60%. But now this limit is increased. This new limit is this: up to 6 lakh of the book profit or loss, the remuneration could be 3 lakh or 90% of the book profit, whichever is more. And on the balance book profit, 60%. This amendment is applicable from 1st day of April 2025 and will accordingly apply in relation to assessment year 25-26. So this higher limit can be claimed for this assessment year as well. In the last session, one of the person has asked me that this remuneration can be claimed only if there is a separate provision is there in the partnership deed. So one has asked me if there is no change. So partnership deed said that remuneration will be paid as per the slab given in the Income Tax Act, and they have reproduced the slab, which is the old one. So can you pay as per the new slab? So you need to add that clause in the partnership deed. Yes, one thing you can do, if you miss that amendment, you can now can make the amendment in the partnership deed before to decide the remuneration. Because at the time of finalization of the balance sheet P&L, remuneration decide. So that risk you can take, but still it is a risky option. Can we claim the TCS deducted in the hands of the minor by the parent? So earlier, there was a no particular section was there. So now they have introduced a section 1G and they have made amendment. Moving to next. Yeah, this is the section what I'm talking about. Let's take an example given in the memorandum. That's quite easy. So this is the 100 shares bought in 2020 by me at 40 rupees. My total cost is 4,000. 20 shares bought back in 2024 by the company at which price 60 rupees. So what amount I'm going to get? 60 into 20. That is a 1200. So this amendment says that 1200 will be your dividend income. And what is your cost of the shares for 20? That is 20 shares. My cost is 40. So it is a 800. So that will be allowed as a capital loss. Ideally, I don't agree that this kind of provision is a constitutionally valid, because if a cost is there against that shares, if you are fetching some revenue, then adjustment should be given. How they can treat the whole revenue as an income without allowing reduction of the cost of shares in the same year? So I don't agree. But if someone wanted to challenge this thing, they have to challenge in the High Court. That's the only option. Because otherwise, explaining to officer or CPC Bangalore or CIT appeal will not serve any purpose in any appeal. One more example, there are lots of amendments are there. If no one take objection, though it is unconstitutional, still it remains in the statute. Another example will be TDS under section 194N. So that section says, if you withdraw the cash from the bank about 20 lakh or 1 crore, the TDS will be deducted by the bank, right? Then what is unconstitutional in this case? One thing, that TDS deduction powers are coming from the some section 4, 5 or something like that section is there. That section clearly says to withhold the tax from the source itself. So if it is income, then only withholding or TDS can be made. So if there is no income portion is there in any payment, the TDS cannot be allowed. So in the case of a cash withdrawal from the bank, there is no income portion is there. So because of that reason, 194N, as I understand, is not a valid section. But still no one is opposed. So it will be remain there in the statute. Then moving to next. Now this is another thing. As of now, if we have the rent income from the house property, residential house. So some of the assessee were offering the rent income from residential house as a business income, maybe because they are renting out lots of a house property and that's why considering it as a business. But they have made a clearly amendment that if you are earning a rent income from residential house or not commercial, then it will be always be taxable as the income from house property, meaning thereby you cannot offer this rent income under the other rates. As far as the commercial properties are concerned, still option is there to offer as a business income if it is a part of your business. How to prove it is a business? It depends on facts to facts base. Yes, if you are doing a PG, it is a PG house wherein also you offer offering other services. So obviously you can take it as a business because you are offering the not only premises but you also offer some services like laundry, food services of a cook, electricity, and some other different services are there. So it is not a purely rental income from the property. Then moving to next. Amendment to section 47. Very small thing. In section 47, clause number 3 says that if any capital asset is transferred under a gift or a will or an irrevocable trust, then it is not a transfer. Ideally, this clause was for the gift made by individual or HUF. But some of the company transfer their shares to the subsidiary company, transfer some assets to their subsidiary company, and saying that it is a gift or it is a basically gift by the company to another company, and that's why taking a benefit of this section. So they have amended this section wherein they have clarified that gift given by individual HUF or will or transfer to an irrevocable trust. So in short, this clause benefit is now available only for individual HUF, not available to any other person. That amendment is made. Then after the reference is given, therefore if a value of the property cannot be identified, sale price, then fair market value will be taken. The reference is given that why they made this amendment. Okay, on the remuneration part, if you are paying, then TDS will be 10% if it is more than 20,000. Now, this amendment is applicable from first day of 2020, first day of April 2025. Now, over here, they have mentioned this thing only. So, lots of people had a query that whether it is applicable from assessment year 25-26 or financial year 2025-26. So as far as my past reading is concerned for the past finance bill, every time when amendment is made in context to TDS, it is applicable from that date. So it is basically from first day of April 2025 financial year wise. In the past, 194Q and 194O was introduced from 1st of October 2020, for example. So it is applicable only if a transaction took place after 1st October 2020. That's how we need to read. So this amendment is applicable from financial year 25-26, and that's why assessment year 26-27 will be the relevant assessment year. And otherwise also lots of people has answered me for payment of this 194T TDS. There was no challan is available for financial year 24-25. So indirectly, even a TDS site has said it is applicable from assessment year 26-27 or from financial year 25-26. Then TCS on notified goods. So earlier only on purchase of the car TCS was collected, but now on some luxurious goods if you are purchasing, for example, some watches having a cost more than 10 lakh, I guess, or 2 lakh, TCS will be collected. So other goods are also notified under this section. Amendment of the TDS provision. Lots of people had say, for example, me and Bhavin Bhai is purchasing a property. Value is 60 lakh, 30 lakh by Divyang, 30 lakh by Bhavin Bhai. So lots of people were saying, bhai, value per person is less than 50 lakh. So TDS will not be applicable. So over they have made a clarification. Value of the property is supposed to be seen, not the value paid by individual co-owner. So in this case, TDS will be applicable. In our example, answer is yes, because property value is more than 50 lakh, though individual share payment is less than 50 lakh. Clear? This is amendment. Moving to next. This is section 194G, 194C. So 194C has the word work. So if anything is covered under the definition of the work, 194C will be applicable. Under section 194J, TDS is required to be deducted if it is a professional payment or professional technical services and also some other payments. So they have made a clarification that if anything is covered specifically in section 194J, 194C cannot be applicable, or that payment cannot be covered in a definition of the work. That is a work contract. So they have clarified. So anything is specifically covered under section 194J, 194J TDS rate will be applicable. Now that is something weird. I'm just discussing section 37. Section 37, subsection 1 says that in which kind of scenario we can claim a deduction if it is for the purpose of business. So conditions are there. Expenditure is for the wholly and exclusively for the purpose of business. It is not a capital expenditure. It is not a personal expenditure and so and so. So many, I think 2008 before, some person make the payment to the in Mumbai to some local bhai. That is a judgment, huh? And they claim a deduction under section 37(1) and claim that it is not a personal expenditure, it is not a capital receipt, it is for purpose of doing the business. We need to incur this expenditure and could allow the expenditure. So then after amendment is made in 2008 that if an expenditure is incurred for the purpose which is in a violation of any law or which is a prohibited under law, then that expenditure will not be allowed. So this amendment is made. But later on, after amendment, one person from one particular company traveled to Jharkhand. The manager of that company traveled to Jharkhand. And in the Jharkhand, that manager was kidnapped by the Maoist. And ransom is asked. And the bargaining starts from the 13 lakh. That is mentioned in judgment. Huh? And finally, company paid 5 lakh rupees for the release of the manager. The company claimed that expenditure of 5 lakh as a deduction. And matter again reached to the appeal, and the appeal company claim that though that explanation is added, there is a person is in violation. Now, whether that payment is in violation of any law, now that payment has no violation of any law. Kidnapping is a crime. Paying a ransom is not a crime. Now, second, whether it is prohibited by law. So, any law exists in India which says that paying a ransom is not allowed? Answer is no. There is no such law is there. So, he contend that this expenditure should be allowed. So, in that case, yes, that expenditure was allowed. So again, they made the amendment not for this particularly, but for example, we have violated particular law. So for contravention of the law, sometimes compounding is allowed, or by paying a fee, we can get a waiver. For example, late filing fee. In case of a TDS default or any other default, we can pay the compounding fee. So whether that will be allowed, answer is no. So that amendment is there. Clear that the amendment is made over, but for that they will notify it. This is the amendment. Point number 5. Accordingly, it is proposed to amend the explanation 3 to subsection 1 of the explanation 37 of the Act to clarify that expenditure incurred by an assessee for any purpose which is an offence or which is prohibited by law under subsection 1 shall include any expenditure incurred by an assessee to settle proceedings initiated in relation to a contravention under any law for the timing in force, as may be notified by the central government. So they need to notify it. Then after it will be applicable. Moving to next. Direct tax Viva Se Vishwas scheme, it is already over. Closed now. Equalization levy, I'm skipping it as of now. Amendment to section 276B. Section 276B says that prosecution will be launched if a TDS is not deposited within the time allowed as per law. So time says that after month end within a 7 days. In case of the calendar months, in the case of the last month, it is 30 days, I guess. But whatever, within that time, if we have not paid that amount, prosecution can be launched. So they brought the amendment by saying that there is two limit. Payment of the TDS is within 7 days from the in the next month, and for filing a TDS return, it is a quarterly. So by before you can file the TDS return, and before that time, before that date, you have paid the TDS, though late, then prosecution will not be launched. So in short, if you paid the TDS before the due date of filing the TDS return, then prosecution will not be launched. That is amendment from 1st of October 2024. Then I think we have 6 and 5, we have 25 minutes. Moving to next. One more very relevant power of the Commissioner appeals. CIT appeal has no power to set aside the matter. So if we file the additional evidence to CIT appeal, he will ask for the remand report from assessing officer. Based on the remand report, he will pronounce his order whether addition is sustained or it is a deleted. But now CIT appeal has a power to set aside the matter. So if you file any additional evidence to CIT appeal, then he will set aside the matter to the file of the AO. That power is given and that is utilized very extensively by the CIT appeal because lots of backlog is there with the CIT appeal as of now in the faceless regime. That's all. No much amendments. Just a minute. That's it. Other points are also there to be covered, but I think we should take the question answer first of the topic. Can we?
Yes.
Okay.
Bhavin, I think you can
Yeah.
help me.
There is one common query that if we have a offender loss, then how to report it, and whether if we want to claim it, then is tax audit applicable?
Can you repeat the question again, please, Vanvi? I think
Yeah.
some voice was correct.
Okay. If there is any loss in offender, then
Loss is there
whether
in F&O?
yeah, if I want to claim loss in offender, then whether I have to do a tax audit, whether is it compulsory?
Okay, done. So let me, your question is something like this. In the future and options, your client has made the loss
Yeah,
and the loss you wanted to carry forward. So in that case, audit is necessary.
yeah,
First scenario, that assessee has not gone into section 44 AD earlier for earlier 5 to 6 years. If that is a scenario, 44 AD in your case is not compulsion. So in that case, simple section 44 AA says you need to maintain the books of account if your income is more than 2.5 lakh. I'm assuming individual HUF, and your turnover is more than 10 lakh, you need to maintain the books of account. That's the provision what I can recall as of now. But whatever provision is, in that case, maintain the books of account. 44 AB says 44 AB says that if your turnover is up to 10 crore and your cash transaction is less than 5%, then no audit. In F&O, no transaction will be in cash. So if your turnover is more than 10 crore, then only audit will be applicable. So let me take a scenario. I'm the first time did a future option. I have not declared business income anytime before. This is first year I made a loss. In that case, just let the others relevant person know that he's unmuted. Okay, done. I'm going. So in this case, I simply have to maintain the books of account, and 44 AB says that my turnover is less than 10 crore, no audit is required. So simply maintain the books of account, file the return, claim the loss. It will be allowed. But I'm assuming that you are filing the return before 31st of July, which is a deadline for the non-audit case. Now, let me take a second scenario. If earlier I have declared a business income, but in that case, I have not gone for 44 AD. Same answer, no change. Well, let me take a third scenario. Earlier, I have gone for 44 AD, whatever business it is. If you refer 44 AD, 44 AD is not business wise, it is a assessee wise. Still, it is a debatable, but let's take a safer approach or a safe interpretation. In that case, earlier I have gone for 44 AD, answer is yes. So in this year, this is my earlier, my 5 years are not completed. Let me remind the provision. 44 AD subsection 4, I guess, says if once I have gone for 44 AD for first year, for next 5 years, I have to be there in 44 AD. So in our example, 44 AD, I have chosen earlier. Yes, in this year, I also now need to go for 44 AD. So whatever my turnover is there of F&O, I need to declare 6%. If I don't wanted to declare a 6% because there is a loss, get your books of accounts audited from the CA and carry forward the loss. Then, now let me take a fourth scenario. I have gone for 44 AD in somewhere in assessment is 1780. And continuously I am on 44 AD for all these years. So I need to be there in 44 AD for next 5 years after 1780. So 1819, 1920, 2021, 21, 22, and 23, 24. So this 25, 26 is out of the scope. So now can I come out of the 44 AD? Yes, without my books of accounts get audited under 44 AD. But now applicable section will be 44 AB, which says my turnover is more than 10 crore, then yes, audit. My turnover is below 10 crore and above 2 crore, something like that, or whatever, 1 crore, but my cash transactions are more than 5%, audit. Then, am I clear? Next query, please.
Someone is asking relating to this question, if I have a business which I am showing under 44 AD and I am
Sorry,
claiming
again.
yes.
Pawan bhai.
If I have a business which I am showing under 44 AD and I
Okay,
am claiming loss from F&O,
I'm claiming a loss.
then will audit will be applicable for
Same, I
F&O?
think it is covered. I have
It
covered a
is
four
covered.
scenario.
Yes. Okay.
You need to check that in earlier year, you have gone for 44AD or not. Next, please.
Okay. One of query was recently due to tax rebate up to rupees 12 lakhs. Will it not be better to show the profit as business income and not capital gain?
Again, sorry. Please repeat the query.
Yeah. One person is asking, recently due to tax rebate up to rupees 12 lakhs, will
Okay.
it not be better to show the profit as business income and not capital gain?
Now it depends completely. There is no clear-cut answer is available. You need to calculate. If your income is really higher, it is a different scenario. If you are offering under the business rate, your income is really higher, you will be taxed at a 30%. I'm assuming your income is more than 24 lakh. But in capital gain, it will be only a 20% for the short term, and for long term, it is a 12.5% without indexation.
True.
But otherwise, also, first of all, please check where law allow you to offer the income without litigation. And that is already
Okay.
discussed based on the circular.
Right. Okay, one person was asking, can we report net figure either profit or loss from F&O instead of taking profit to the income side and loss to the expense side?
Again,
Okay,
again.
sorry. Uh, can we report net figure of F&O for profit and loss
Uh,
instead of taking profit to the income side and loss to the expense side?
don't do that. So your question is, for example, there is a net loss is rupees 10. And there's
Yeah,
two transactions, profit of 20, profit of 10 and loss is 10, 20. So
yeah.
separately, that is a more better approach because you need to show the transaction. How can you simply put a direct loss, one entry? And in that case, reconciling the books of account will be too difficult. I understand that. So don't do that.
Okay.
Next.
Okay. Let's say Mr. A has F&O turnover of rupees 10 lakhs and incur
Hmm.
loss of rupees 12 lakhs, and he is a salaried person and having salary of 40 lakhs.
Hmm.
So whether he is required to get account audited if he does not wish to opt 44AD?
In that case, whether you need to maintain the books of account, turnover is 10 lakh and the income was 12 lakh, right?
Uh, s-
Profit is that 12 lakh
no,
Loss.
there was loss of 12 lakhs.
and turnover is 10 lakh.
Yeah.
So up to 10 lakh, there is no requirement to maintain the books of account as far as I can recall, but refer the 44AA, wherein
Okay.
provisions are there.
Okay. Okay.
Okay, one query of the Swati is there. If income is less than 50% of the receipts, tax audit applicable under 44, I think ADA must be there. If you are declaring less than 50%, yes, tax audit will be applicable. But as far as I can recall, under 44 ADA, there is no restriction. So anytime you can go into 44 ADA, and anytime you can come out of 44 ADA. Then that will be there. I think any other queries are there which are unique. Please post the same in the chat box. Question
Yeah.
answers. F&O turnover is around 20 lakh and loss is 15 lakh. Do we need to get is covered?
One person was asking if we are doing daily basis trading of shares and value of a sale exceeds rupees 2 crores, should we treat as business or capital gain?
Better to take as a business income. That is a more safe. If you wanted to save some tax with the risk of litigation, you can go for capital gain. And
Okay.
you can also do one thing. You can segregate the transaction. If a holding period is more than 1 lakh, or a holding period is more than 1 year, you can choose those transaction and show it as a capital gain. But in all scenario, you have to calculate which is a better option from tax perspective as well. Then
And for AY 25-26, rebate under section 87A for short-term capital gain under section 111A is applicable or not?
again, I missed it. I missed the query.
For AY 25-26,
Uh,
rebate under section 87A is available against STCG under section 111A.
Answer is something like this. If you refer the provision, then rebate under section 87A is available against the short-term capital gain as well. But As I always told, that CPC Bangalore is having their own income tax. So they are not allowing it. And what is the problem? If a CPC Bangalore does not allow the rebate, the only option available is a litigation. Now rebate demand will be 25,000, I'm assuming, because up to this year 12 lakh is not available. So for 25,000 or some small amount, how can you fight up to tribunal? Why tribunal? I'm saying as of now, CIT appeal in most of the cases is not allowing the relief on technical grounds or the legal interpretation. Yes, one more thing, but today morning Ahmedabad Tribunal, Honorable Tribunal Ahmedabad bench has pronounced the order wherein they have said that 87A rebate will be allowed against the short-term capital gain tax as well. For that, if anyone would like to note down the judgment, let me help you. Anyone would like to see the judgment?
Yes.
Okay, kindly note down the judgment I'm sharing on the screen. Luckily, I have saved that in our folder. The screen is not visible, right?
No.
Okay, this is judgment. My request, please save the ITA number of the judgment because by ITA number you can download from the tribunal site as well. ITA number is 1014 Ahmedabad 2025. And this is the assessment year 24-25. I'm just reading the relevant para. In view of the above discussion, we find that assess is a resident, individual, and total income declared for the assessment year 24-25 does not exceed 7 lakh. It is also an admitted position that the assessee has exercised the option to be assessed under section under the new regime. Next, on a plain reading of the statutory provision, this is relevant. There exists no express bar either in section 87A or 111A for denial of the rebate. Why they are saying? Because for long-term capital gain, under section 112 or 112A, there is a specific restriction is there which says that against the long-term capital gain tax, no rebate will be allowed. But over here, in 111A, there is no restriction. In respect of the tax payable on short-term capital gain arising from transfer of listed equity shares, taxable at a special rate under section 111A, legislative intent is further clarified by subsequent amendment. So they have said this amendment will be applicable prospectively. So this is not applicable for assessment of 24-25. So this amendment is made by Finance Bill 2025, applicable from assessment at 26-27. If you refer the amendment. So as per this judgment, if you wanted to fight, yes, you can fight up to tribunal, but litigation cost will be higher. Then any other, sir? But even if a high court allow, CPC has to implement it. Yes, CPC has to implement it. So Swati, if you wanted to take a scenario, then claim the rebate against STCG. If you receive the notice under section 143(1)(a), you can always say that tribunal judgment is binding. Just mention that a department has not filed the appeal to High Court. So in that case, tribunal judgment is binding. Answer is yes, but there is one loophole. Department has issued a circular time to time which says that department can file the further appeal only if a tax effect is higher than the given limit. So in this Ahmedabad tribunal judgment, whether revenue can file the appeal in High Court, answer is no, because tax effect is less than 1 crore or something like that. So department will always say that judgment of the Ahmedabad tribunal is not acceptable to AO because we have not accepted that judgment and we have not filed the appeal in the High Court just because of the circular of the CBDT which says that you cannot file the further appeal. So in that case also you will not get much relief. Some assessing officer don't know about this circular can grant you relief, but it doesn't mean that it is allowed. Then some different
Uh,
queries are there. I'm not looking into those queries. Huh?
yeah, yeah.
I think we need to
Someone
keep
was
another session
asking
for
about,
following the. Okay, yeah.
sorry, so someone was asking about can you discuss the reporting of crypto gain and loss?
No, I think for crypto, I think gain, the tax rate is a 30%. That is specified separately. So
Yeah.
now crypto gain will be taxed at the 30%. That's what I can recall.
How to report and calculate foreign stock market transaction of a residential person?
Residential person, foreign stock market transaction.
Yeah.
Question is quite open, but still I'm trying to answer it. First of all, you need to know whether tax is paid in that country or not, in the foreign country. If tax is paid in that country, then refer the double taxation avoidance agreement of of the India with that country. For example, USA. In that treaty, it would have been mentioned that whether income is paid in the USA, that income will not be taxed over in India. First option. Second option, it may have mentioned that income need to be offered in India, but tax paid in foreign will be allowed as a rebate. So that is a probability. Then,
Yeah. And one last question.
yes,
Uh, Purchasing personalized software TDS needs to be deducted under which section? 194J or C?
personalized software,
Yeah.
debatable. I need to check. I need to check the provision. See, let me give you the answer. Every answer of the Income Tax Act is not readily available.
Yeah.
Whenever we get a query, we read the section, we search for the circular. If answer is still not available, we search for the case law, and then after we give the answer. So
Even
we
it
cannot
may
recall everything.
vary, even it may vary transaction to transaction.
Yes, obviously,
Yeah.
obviously.
Yeah, I
But there are some
guess.
judgments are available. If a tailor-made softwares are available, it is a purchase.
Yeah.
So it will not be covered as a technical services under Section 194G. That's what I can recall.
Yeah. Okay, I think
Then,
all the queries are sorted out. Okay. Okay, now on behalf of the Income Tax Bar Association, All Gujarat Federation of Tax Consultants, Tax Advocates Association of Gujarat, and the Gujarat State Tax Bar Association, I extend my heartfelt gratitude to our learned speaker, CA Divyang Shah, for sharing his valuable time, insights, and expertise with us today. Your lucid explanation and practical approach have surely enriched our understanding. A special thanks to CA Dipti Jain from GyaanStation for her excellent coordination in making this webinar possible, and to Choice Group for their support and association in this initiative. I also thank all the participants for joining us in large numbers and making this session interactive and meaningful. We look forward to your continued participation in our future programs. Thank you and have a great evening ahead. Thank you, everyone.
thank you again to all the bodies who are organizing this
Thank you,
session. Thank you
Ashutosh
again.
sir.
थँक्यू दिव्यांग भाई. अरे भाविक
My
बघा,
pleasure.
थँक्यू. थँक्यू.